You have seen the gold prices trading around $1,300 per ounce. There has been good gains in most of those commodity markets. We will talk about all of that at this point in time. Take a look at the crude prices also, where you have seen strength continuing. The NYMEX and the Brent crude prices are trading at a 6-week highs in the international markets, and we have seen some support coming in for the Indian markets as well. Still trading strong at 109 for the Brent prices, even with a 0.25% decline coming in there. Let's get on board then Wwatch, and he joins us live with his views on all of that space. Vijay, hi, welcome to the gold and silver prices first. And this week really has been very choppy at 1300, and that is where we seem to be closing this week, especially for the Indian markets and abroad as well. How would you look at the next week now?
Manisha, the next week also is likely to be fairly news and event-driven. The geopolitical stress in Crimea and Ukraine are likely to dominate the scene. My guess is a lot will also depend on international crude prices. If crude prices were to go up, it will drive up inflationary fears, and therefore you might see some amount of a technical rally in gold, although I'm not very gung-ho about sustainability of the upsides. My guess is 28,850 or 28,900 odd levels will act as a resistance in the absolute near term. And as far as silver is concerned, I think 43,750 seems to be the glass ceiling at this point in time.
Let's also get in a view from Sunil Kashyap. He's MD Scotia Bank, Hong Kong, and he joins us for gold and silver view as well. Sunil, hi, welcome. What is your sense now really coming in for the gold prices? It really has been a contrarian call where we have seen prices gain up. The commodity has performed positive so far. How are you reading the gap in bearish calls and bullish positions?
Well, you know, gold is a very interesting asset because it's been around for thousands of years, and at various times people look at it in a different way. And what we're seeing right now is a change in perception about gold. For the last 10 years or so, there were a lot of people getting into gold because they felt gold was undervalued compared to other assets. And in last 12 months or so, it's been a neglected asset, and people were the same people who bought it for the last 10 years were selling. And so that's why you felt this feeling of bearishness. What has happened, however, is a new set of investors are buying now. And so what you're seeing is continued physical demand from Asia, but also demand coming in from people who are worried about inflation, who are worried about higher interest rates, and then more recently, of course, the fear of political crisis in Europe has fed gold demand, and that's why the prices have gone up. And that's created that gap between the recent bearish calls and suddenly the recent buying that's taken place on gold.
Sunil, also the US data is not very convincing of an interest rate hike perhaps in 2015. Do you see that supporting gold?
Well, there's different factors that affect gold. Clearly, right now, the short-term interest rates seem low, and they seem that the short-term interest rates will remain lower for some more time. But there is that fear that at some point you will have higher interest rates, and that could result in inflation. And so, therefore, you're seeing some buying taking place on gold with regard to that.
Final question, Sunil, then. The Indian gold curves will now only be visited after the new government comes in. What changes are you expecting then in this quarter?
It's too early to say. I mean, we're still in the middle of an election. The results will come out later in May, and then there'll be a process of probably negotiation and some kind of a coalition government. So I think we don't really expect too much of a change in the Indian regulations for the next quarter. Maybe, if anything, something may happen closer to the end of the year.
Fair point, Sunil. We will wait for that. Thank you so much for joining us with your sense on the precious metals there. But Vijay, coming back to you, how would you look at energy? Because we've seen good gains coming in for this week, and the concerns about Russia and Ukraine are back.
Manisha, in the absolute near term, the MCX crude oil prices have a short-term resistance at 6,330 levels. Now, this is a very mild resistance. Crude oil has attempted to go close to this level twice and retraced back to the 62.20 odd levels. Now, if this time around we were to see a sustained trade above 63.30 with high volumes and open interest expansion, maybe you would see a spike up to 63.65 to maybe even 63.90. That is where I would give it a maximum upside potential in the absolute short term. By absolute short term, I mean by end of the coming week, barring any fresh developments or any fresh geopolitical stress emanating from there.
Also about the base metals then, while the data has been slightly weaker and there has been some dovish statement that's come in from Janet Yellen, how would you look at the Chinese policy changes which the markets are right now factoring in?
Manisha, China is beginning to spook a lot of industrial metal bulls, and the kind of data that is emanating from there is that of the Chinese government trying to pump prime the economy, so to say. And pump priming would give you a relief rally, but I doubt if it could sustain the upsides. So at higher levels, I would expect selling pressure. If copper was to go again to 412 levels, this is a resistance that I've been maintaining off and on. My guess is at 412, copper will start to show signs of heaviness. If nickel was to go to 1110, 1120 odd levels, I see a whole lot of selling coming into nickel. Where lead and zinc are concerned, another 2% from here, and they would start to get top heavy all over again. So I'm not very gung-ho on industrial metals still, although there are signs of some early signs of bottoming out process there. It's early days yet, and things can reverse fairly quickly.
All right, so that's the view really coming in for the base metals as well. Choppy trades have continued there, and remember, it's a holiday, a truncated week for most of the global markets, especially for commodities. Well, let's talk a bit about monsoon and agro as well, and we have seen most of those agriculture prices trading on the higher side because of some concerns about monsoon. Let's get on board then. Jatin Singh, he is CEO SkyMet, and he joins us on the show as well. Jatin, hi, welcome. This week itself you have come out with a report and you again have reiterated on below normal monsoon for 2014. So while there is a concern on below normal monsoon, do we need to factoring it in now?
They're all kind of, let me put it this way. See, one, I think really bad is an exaggeration. It's a below normal monsoon. It's not, it doesn't seem to be a drought, at least at this point of time. And if you look at the, if you go to our website, skymetweather.com, there you'll see the PPT and the graphics. It's below normal in each and every month. So it's kind of distributed all across. On the positive side, I can tell you that August seems to be the best month of all at this point of time.
So while you're saying August is the best month geographically, which states do you see with more concerns then?
I would say, broadly Northwest India and West Central India. So Punjab, Haryana, Rajasthan, East MP, West MP, Vidarbha, Telangana, North Karnataka, Konkan, Goa, Madhya Maharashtra. If I were to draw a line south from Punjab to Goa, so the area around it, if I draw a big circle, that seems to be the most vulnerable at this point in time.
All right, Jatin, appreciate you coming by and giving us that information. So, Vijay, how would you now take it in? Because we are looking at some concerns about monsoons in much of these high-producing belt.
Manisha, agri-commodities will see a whole lot of volatility from now, probably till end of June, if not further beyond. One has to take each commodity on a case-by-case basis. Now, talking about potatoes, I think potatoes are showing signs of weakening from here because the produce will now start coming to the mandis. Where chana is concerned, 3375 as a top is something that we've discussed many times, and that top is now firmly into play. So if at all chana was to fall below the 3025 levels, which is 75 rupees away from where we are at right now, my guess is chana prices will start to weaken from here. If at all the monsoon is not half as bad as we fear it to be, my guess is sugar prices will fall. Where wheat is concerned, wheat is likely to remain under pressure with the 1550 to 1565 band acting as a very firm resistance on the upsides. So it's a counter by counter that you need to take it up. Of course, the weather will be an imponderable or a variable factor which is under nobody's control. So we'll have to play it by the ear as and when the monsoon forecasts are updated.
Fair point for that. We also are awaiting the Met Department forecast, which would be coming in the next week itself.